We have Deepak Shenoy. He's the founder and CEO of Capitalmind. Deepak, good morning, and thank you so much for having us coming to us, talking to us here at NDTV Profit. Deepak, firstly, your check on the markets, broader markets specifically. It's been very, very mixed. And it's turning out more and more to be a lot more theme specific as compared to, well, a secular move. How are you reading into things at the moment?
So overall, I think it's December, so there's always lighter activity towards the end of the month. Not so great in terms of news flow yet. We have possibly most of the news flow for the month is kind of gone behind us. We might have a little bit more coming in Jan. Jan will get results. Jan will have a change in the US presidency effectively, and Feb 1st is the budget. So I think more activity happens going forward. Right now, I see the market being a little more volatile, both upside, downside. We've had a good month really. So I think last 1 month has been kind of good, but you're going to see some corrections in the market no matter what you do. The mid caps have rallied. I think we're seeing some emergence of stronger government capex towards the end of the year, the last 4 months. So I think that will propel some of the companies that didn't do well in the last 2 quarters. So overall, I don't see this market as majorly negative in terms of anything from a trigger side. But I do feel like it's lesser volumes. So you're going to, lesser volumes in comparison, perhaps, and so you're going to see some volatility on both sides. Certain stocks will go up 20-30%, I'm sure, and so stocks will go down that much as well. I don't think I have a broad market view in particular in terms of trend right now.
Deepak, morning. Tamanna here. Since the morning in our studios, the chatter is about how more people are excited about the match going on rather than what's happening in the markets. And perhaps at least the trend which we might see continuing into 2025 is also focus on primary markets. A lot of those new listings sucking up capital. I'm just wondering, when you're looking at allocations or you're looking at what's exciting, are you seeing any potential in the primary markets, or is this going to be a phase to stick to the tried and tested, look at the large caps, the mid caps, which now should be actually positioned as large caps, and that's where you're focusing?
So Tamanna, we're biased because we're a PMS. We can't do anything in the primary markets. So I'm going to be like, we can't even apply for the stock. So
you're sounding sad about it, which is telling me that some great opportunities are being lost out there.
Well, I think there are always going to be opportunities, but the thing is that since you can't apply, there's nothing I can do about it. But so some of these companies may get interesting going forward. I'm not so sure about. The current, of course, we are seeing some extremely good moves on the market in terms of stocks listing, and there's some of the pricing in recent IPOs has been much better than earlier. So you're looking at companies whose listing values have been higher because they've been able to price the IPO lower. I think that's a good trend. People should price IPOs low. They're not diluting much, 5-10% in many cases. So I think pricing the IPO right is an art, and the investment bankers have stopped trying to optimize for the highest price, and perhaps promoters also have started to realize that pricing IPOs right is great. This is why I will miss the cycle, because earlier I didn't care because the pricing was so high. I didn't want to participate at those prices. Today, I think some of the companies you might be seeing much better pricing at IPO levels. But the secondary market has enormous opportunity here, both on the mid-cap space and in some of the large-cap space as well. I think what we're seeing today and what we're seeing 5 or 10 years later in terms of where the Indian economic system and perhaps market should be, there's a very big difference in valuations between now and then. Even our large caps in terms of market cap would be classified as kind of low-level US mid caps, both in terms of revenue and in terms of market cap. But I think as we scale as an economy, a lot of these companies will get there, specifically in manufacturing, perhaps in defense, perhaps in...
So when you're saying you're liking, there's a lot of opportunity in the secondary markets, get a little more detailed, Deepak. What are you liking right now? Which sectors and what are your 2 or 3 favorites?
Yeah, so we're still honestly quite happy to look at manufacturing as a theme. There's a lot more happening there. Part of it is defense, so defense-based manufacturing, I think that'll keep increasing. We'll also have a bunch of very interesting, moves around in infrastructure, in the financial infrastructure specifically. So the companies that allow you to perhaps even trade, perhaps participate in bond markets or mutual funds, all of these companies, there's going to be a very, very rapid increase because India is financializing very, very rapidly. Last month, we saw 35,000 crores enter the markets. The month before was also 35,000 crores. We've seen this happen even when the markets went down nearly 10 or 11% from the top. So I think as we financialize, that's just mutual funds. There's also insurance. There's direct stock market participation. There is a lot of those companies, whether it is say a CDSL, we own this by the way, or a KFintech or CAMS, who provide mutual fund infrastructure. I think there's a large change that will happen in their economics as we evolve there. There's also companies in the what we call the import substitution space, basically making here for India rather than trying to make in India and export to other people, because we import a lot of goods. And if you were to just replace maybe $5 to $10 billion worth of imports with local manufacturing, locally produced goods or services, we would actually not have a current account deficit at all. In fact, we'd probably end up having a current account surplus on a per quarter basis. I'm not saying 10 billion a quarter, 40 billion a year. This is not meaningfully large for India to kind of not be able to do. So I think that is going to be the focus in the next decade, is building on these companies where you're catering to Indian demand. I run a portfolio called Surge India, so obviously I'm biased. So, but I like a lot of these companies. It's Indian tourism itself, Indian travel itself. A lot of companies in this space have already done really well, but I still think we're scratching the surface of what they will be in the next 10 years.
All right. Thank you so much for that, Deepak, and wish you a very happy 2025.
Thank you so much.
We'll have you back for what the big ideas are for 2025 as well.